Welcome. Let's preserve your wealth. We're going to talk about three things. First, we're going to talk about what do I mean by dollar is dying and assets go up in value and how can that affect you in a positive way. Second, we're going to go over current prices and why I do this. And then third is going to be a warning. Now I have to say, I'm a big dumb animal. Don't do what I do. This is just informational purposes only. You're going to want to stick around for the end because you do have to be careful and, in my opinion, mitigate. That's what I do. I try to mitigate the downside. Okay, so first off, let's talk about, in general, these four charts. Now, what you can see here is that I'm showing over a long period of time, just 5 years. But these things, as you can see, are going what they called up and to the right. They're green. They're going up in value. You've got the Dow Jones 30 stocks. You've got the S&P 500, which is 500 stocks tracked. You've got Bitcoin, whether into cryptocurrency or not, it's an asset people are using as a store of value. You've got gold, which has been a long time asset and store of value. They're all going up and to the right. They're going up in value. Okay, now look at this chart. This one is red, not green. Red is bad. Green is good. Green is going up in value. Red is going down in value. This is the purchasing power of the US dollar, or any currency for that matter. Why? Because of inflation. And what does that mean, purchasing power? You might think I put $100 in the bank. Next week I still have $100. I didn't lose anything. Well, eggs are twice as expensive. Cars are more expensive. Housing's more expensive. Everything's more expensive. So what you can buy with your money goes down. That's why I do this show, and I do it every week, so that you can look over time and see that assets are going up, dollars not. And let me show you that in real time. This is inflation. And it's showing you 2.7% in November, 2.6% in October, and it goes back. You might think 2-3% inflation, not bad. Over a long period of time, seems to be about right. Let's look at over 10 years. It's been high over the last year or two. Prior to 2021 to 2023, it was a little lower, even almost zero, and at times less than zero. But this right here from 21 to 23, that was unbelievable, up to 8, 9, 10%. What does that mean? That means that prices rose here and they never came back down. That's why the average car is not 30,000, it's 40. The average house isn't 380 or something, it's 480, whatever the numbers are. This needs to mimic this here in order for prices to come down. And you say, okay, I get it now. Dollar's not worth as much. Well, what can I do? Well, let's take a look at the prices from last February of 2024. This is December 20th of 2024. Had to check the date there. And the prices here, look at this chart. From February 3rd, 24, first column, to 12/20/24. Savings, CD 3-month, and Treasury 3-month, the three top line items there. I look at those because that's essentially what would happen if you just put dollars in the bank. You don't get a great rate of return. A CD, I use 3-month because it's short term, meaning you can turn it back into dollars within 3 months. Treasury 3-month, short term, turn it back into dollars. Okay. However, as we just saw, inflation is extremely high, basically wipes out your gains, or you're actually losing money. What else can you do? You can put it into assets. Think about this. I always use this example. Maybe you log in. Maybe it's a retirement account for work, or it's an account where you buy some stocks, and it shows you a dollar value. Realize you don't have dollars. You have whatever asset they purchased. It can become dollars if you sell it. You can look at studies, and I've shown this before, that the truly wealthy don't hold a lot of dollars. They hold a lot of assets because the assets go up in value. Now, we'll get to the warning part about emergency funds. But now look at these, what I would just call stores of value: gold, silver, Bitcoin, and Ethereum, the next 4 lines. Since the beginning of the year, they went up substantially. Gold went up 2,050 to 2,643. You can see silver went up almost 30%. Bitcoin's gone up quite a bit. Ethereum's gone up quite a bit. Then look at the next ones, the Dow Jones and the S&P 500, which I just showed you. 30 stocks, Dow Jones, S&P 500, 500 stocks, their indices have gone up substantially as well. Okay. Now you might be thinking, I'm not going to buy 500 stocks. I don't want to buy 30 stocks. I don't want to get involved with, how do I buy gold and silver? Do I have to go to a store? How does that work? Well, you can use, and I always have a link to this down below, a page where it shows you what are called ETFs, where you can buy a share of an ETF. And if it's a spot ETF, it means that they buy the underlying asset of an equivalent value. So there's a list of Bitcoin ones if you're interested, Ethereum ones if you're interested, gold spot ETFs, and silver. It means that they can be very liquid. You don't have the physical asset. They're holding it on your behalf, but you can log in and sell that ETF just like you could buy that ETF, quickly convert it to cash if you need to. All right, now let's look at the numbers down below here. We've got inflation at 2.7, unemployment 4.2, and then the 2-year and the 10-year treasury. So now let's talk about, let's say that you do want to convert some of your dollars into assets. First, I have links down below about emergency funds. Very important, meaning you do hold some cash in case you need it immediately. Maybe kids' braces or tires for the car, all these unexpected expenses, and hopefully will not happen, but maybe you or someone in your household loses a job and you need to use that income to make ends meet until they're able to find employment. So if you put everything into assets, you might have to sell some of them when the market is down. Because at those charts I showed you, they do go up and to the right, but they also pull back. Case in point, during this week, the Dow dropped 1,000 points in a day. Bitcoin went from about 105 or so to like 95. That's a 10% drop in a day. Things will drop. They can also go up and to the right. Now, the real warning here is we've got a new administration coming in. That just means that things can be volatile. We have unemployment numbers, which aren't looking good. They seem to be going up, and there's layoffs. I believe personally that real estate is in a bubble and things are overpriced. If you just look at, they have a indicator where it takes, I believe it's the median household income, and they say how many multiples to purchase a house. It's at one of the highest ever. It's like 4 point something when it's usually 2 or 3 point something, meaning it costs way more to purchase a house. It's a larger percentage of people's budgets. That will probably come down. So it's possible that this next year may have great times. Governments need to refinance their debt. They will put more money into circulation. That usually drives asset prices up, typically inflation as well. However, we've got these other factors which might bring the market down. Who knows? We could have a great year. We could have a bad year. We could have a beginning of the year great and an end of the year bad. I don't really know. However, I have been selling some gold and some silver and some stocks and putting some more things into cash just to be safe. When I feel that a market is high, that the earnings per share of stocks are really high compared to the past, I think to myself, the upside potential when things are doing really well might be this big. I'm just using my hands. But the downside potential could be that big. So if I think the downside potential is greater than the upside, I'm going to move a little more into cash. Even though my show is telling you put things into assets, have an emergency fund, keep an eye on the economy, and make sure that your emergency fund you believe can take you long enough in case you lost your job so you don't have to sell the assets when they may be down in a down cycle, what you would call a bear market. I don't know what the future holds. That's my opinion. I hope that this has pointed out to you and shown you with the graphs visually that over time assets do well. If you're looking at charts day to day, week to week, it can be a little frustrating. But if you look year to year, 5 years, 10 years, and you're thinking down the road, money you don't need now, best to have it in assets than in currency. Have a great day. I hope this is helpful. Thanks for watching.